1059 The Region, in partnership with RE/MAX Prime Properties, present On the Market, real estate advice that works for you. Have a real estate question? Call us at 416-335-1059. Tweet us at 1059 The Region or email us at info@1059theregion.com.
This is 1059 The Region. I'm Tina Cortez with On the Market, York Region's only radio real estate show. My co-host and our real estate expert is Asif Khan with RE/MAX Prime Properties. Good morning, Asif.
Good morning, Tina.
Now, according to reports, Vancouver home sales slowed in January, and it appears that it was all about the lack of inventory. Do you expect the same to happen here?
I do, and you know, it was the lack of inventory, but also the snow. I mean, Vancouver had a lot of snow as well. We had a lot of snow, record snowfall, and that took about a week out of people going out and seeing houses or being able to let people in just because of the volume of snow that we had. And so I think those were the two contributing factors. Drilling down, if we look at York Region, Tina, in January of 2021, we had 1,288 sales, and there was 1,566 active listings. Now, if you remember, last year we were talking about how little inventory we had to start off the year, and 1,500 units is not enough for York Region. Looking at January 2022, Tina, we saw 928 sales take place in York Region. So that's almost a 25% reduction over last year's sales, and we only have 870 properties on the market in January 2022, or at the end of January 2022. So when you consider we were short at 1,566 and now we have 870, we can pretty much deem this a crisis right now.
So how do you get out of the crisis? Because you don't see it getting any better relatively soon, do you?
No, and even if we start building right now, it's going to take a year, 2 years, 3 years for us to even get the benefit of those home starts. So right now, we pretty much have to look outside of the boundaries of York Region, outside of the boundaries of Toronto. I mean, Toronto didn't fare that much better at all. With Toronto in January 2021, there was 2,659 sales. And, you know, the active inventory at that time was 3,416. And that was just above 1 month inventory, which is very low to start with. And a normal market is 3 to 4 months of inventory. Fast forward to 2022, and January had 2,259 sales, but the inventory dropped. The inventory sits at 1,894 units right now for all of Toronto. And that is, you know, it's a drastic drop even from last year, and we thought last year was bad. So, you know, the two contributing factors seem to have been snow and the lack of inventory. Hopefully we don't have the same types of snowfalls moving forward in February and March, but the inventory, you're right, there's no quick fix to that.
So then walk us through what it's like when a listing does come on the market, whether you're a buyer or a seller. What is the scenario?
What we're seeing is people are lined up to get into the property from the minute it hits the market. And, you know, we've had to limit people to 30-minute showings. Some people have had to limit their listings to 15-minute showings. Now, think about this. People are spending 15 to 30 minutes in a house, deciding that that's their house that they want to purchase, and then going in without conditions to purchase a property. I mean, that's how ridiculous it's become. And without supply, this is the norm, and it has to change. We need more supply. We need more construction starting immediately, and that's up to the municipalities to lower their requirements for the builders to get their permits approved. And once we start seeing supply, I mean, this has been going on since 2015, and that's why there's no quick fix to it. But we can certainly change it over the next 5 years. And if we start building enough properties over the next 5 years, then at least our kids have something to look forward to.
And what advice do you have for that panic buyer who feels like he's got to jump on whatever comes on the market, no matter the price?
And there's a lot of buyer panic out there right now. It goes in little circles. So there's buyer panic, and he starts scooping up any property that comes up, thinking, no problem, it's a fixer-upper. I'll just get into the market right now and I'll fix it up later. And then there's buyer fatigue. It's all the people that have been losing out offer after offer after offer. And they just sit on the sidelines and say, I'm just going to wait this out and hopefully this goes away. But then they see prices continue to climb and you get back into that buyer panic mode and you start buying properties again. So it's, you have to wait until you find the right house. Don't try to just get into the market and settle. I know that's a really tough pill to swallow right now for buyers because they see the prices climbing week after week and sometimes day after day. But the important thing is wait for the house to come up. And if it is the house that you love and you're going to be there for a long time, then you go all in, because the thing with real estate is it's time in the market. So as long as you're going to be there for 5 years, 10 years, 15, 20 years, that equity that you may think you're giving up right now, you're going to build that back.
You said go all in, but how do you know you're not going all in and over your head?
You have to stay within the constraints of what your financial institutions and your realtor are recommending. Quite often people will say, I will just pay whatever for that house. And we almost have to rein them back and just say, listen, this house will appraise for around this value. And even if you overpay a little bit, that's okay. But I can't let you go in that high. And, unless someone has sold a house and they have a lot of money sitting around, or they're being helped by the bank of mom and dad, there's not a lot that they can do when an appraisal comes in $100,000 or $200,000 short. You have to come up with that cash. And otherwise, you're going to lose the deal. But not only that, you're going to get sued. So you want to make sure that you're going in with an educated offer rather than just a blind bid.
Now, what about in terms of rates? We know that they're expected to rise come next month. Do you think that will slow things down? Will it change anything in the industry immediately?
It does slow things down because of the perception of a rate hike. As soon as people hear rate hikes, they think now things are not going to be affordable for me anymore. However, when you break it down and you see that the rate hike may have you paying $40 or $100 or $150 extra per month. And the other thing is, you're being qualified at 5.25. So if the bank is qualifying you at 5.25% and the rate's going to go up to maybe 2.25 or 2.5%, there's still a lot of cushion. The bank knows that you can afford this property. So there is a comfort level there with the stress test to say, even if the rate goes up, 2 times this year at a quarter point each, 3 times, makes that a total of 0.75%, you're still qualified for way more than that.
All right. After the break, urban sprawl, the housing crisis, and the impact of the pandemic. That conversation is coming up. This is On the Market on 105.9 The Region. Stay with us.
Need to connect with Asif Khan from RE/MAX Prime Properties? Call him 416-985-KHAN. That's 416-985-5426. Or email asif@thehomeshop.ca. Now back to On the Market on 105.9 The Region.
Welcome back to On the Market, York Region's exclusive radio real estate show on 105.9 The Region. Over to my co-host, Asif Khan from RE/MAX Prime Properties with today's guest, Asif.
Thank you, Tina. Our guest today is Professor Roger Kyle from York University's Faculty of Environmental and Urban Change. Welcome to the show, Professor.
Thank you. Thanks for having me.
Professor, in your recent study, you say that urban sprawl, specifically vertical sprawl, can be as much of a problem as houses spread horizontally. Tell us what this means.
Yeah, it's a bit of a provocative idea because, normally people don't think of sprawl as being vertical. They don't associate it with high density development. And we created this idea and did some research around it in order to dispel the polarization between this notion that sprawl has what we normally consider horizontal sprawl, when the development of the space that is being used, the land that is being used, outpaces the development of the growth of the population, which means you have sprawl into the landscape, into the countryside. to dispel that as the main problem vis-a-vis the densification of certain parts of the city, which we now have in southern Ontario into the growth machine of the growth plan, in particular areas of the city that are considered an antidote or a remedy for that sprawl. So we said when we look at what is being sold as the remedy here, the densification, may just as carry as many of the problems or some of the problems that are supposed to be solved by that particular policy. So vertical sprawl as the solution to horizontal sprawl needs more scrutiny. We need to look at it and see what it does and how it does it.
The notion of vertical sprawl is certainly starting to take hold here, but where is the concept, or where does it have more history?
The idea came from Hong Kong, which you can imagine is sort of a symbolic place of a high-rise-based, dense urban development. That's where it first was used. This is the backdrop of this is that through the last 20 or 25 years, urban scholars and practitioners around the world have proposed to increase densities in mostly inner cities a lot in order to create a different kind of urbanism than the one we had since the Second World War, which was based on suburbanization and sprawl.
And we're starting to see a lot of vertical development in York Region, mainly Vaughan, Richmond Hill, Markham. But your study was focused in Brampton. Tell us why Brampton.
Well, Brampton is one of the most dynamic cities in Canada. It's you can see a lot happening in Brampton that is symbolic of or indicative of developments elsewhere in the country, and particularly in the province of Ontario. It's a city that has a high population growth rate, and a city which is actively attempting to deal with the challenges of the growth mandates given by the provincial government here in the province of Ontario. So it's a good case study. It's a dynamic place. It's a place where we can see that a lot of the things that we see around the country are happening in one place. Immigration, population growth, high influx of investments, but also, which is one of the things that we're interested in, that my co-author Muradou Cholu has written his dissertation about, which is the financialization of housing and what he calls the debt regime around which now the Ontario economy is built.
And so can you share with us some of your findings of this case study?
Yeah, so in the first instance, we demonstrate that you cannot look at what we consider sprawl in the outer regions of the Toronto area. That sprawl, as we have seen it over the last few decades, can be solved easily. Or that the problems that this development has caused can be solved easily by turning things around and creating just more density. The fact that we've had suburbanization over the last few decades has had to do with the fact that this growth model that suburbanization was built on was meant to create more housing space for a growing population in the post-war decades. It was built on a growth model that had to do with Ontario being one of the industrial powerhouses in North America. Jobs were created, factories were being built, infrastructure was being built, and housing was being built in the suburbs. That growth model collapsed in the 1990s. We've had large-scale deindustrialization, but the growth didn't stop. We continue to suburbanize. We continue to build out rather than up in many parts of the province, many parts of the Toronto area. And Brampton is one of those places that have grown from a small town, a village, a small town after the Second World War to now one of the largest cities in Canada. So the finding here is that when we are now, looking at what the needs are that we have in this province, which is we have a housing crisis, which was also intensified through the COVID pandemic, when a lot more people were looking for larger houses, often on the margins of the city. That this housing crisis is ostensibly supposed to be solved by more growth, by more building of real estate, of housing. And the case study shows us that this growth model doesn't produce the kind of housing that is affordable and accessible to the majority of families that are moving into the region without taking on a huge amount of debt. So this is basically the flip side of this growth, is that it's built on a huge amount of consumer debt in the housing sector, and that we find is a danger not only to the consumers in the housing sector who cannot find accessible and affordable housing, but it is also in the end going to be a problem for the economy overall.
And real estate has always been a driving force behind the Ontario economy. And if you look at the 2019 numbers in your report, we're looking at between real estate sales and new construction, almost 20% of the gross domestic product came from the real estate sector. How did the pandemic affect it, and how much more of the GDP did that contribute to?
Yeah, I can't say, and I don't think anybody can say right now, whether we're going to continue to have this kind of growth of the percentage proportion of the real estate and housing sector and the construction sector because of the pandemic or through the pandemic. We'll have to see how that pans out. But what we already know is that we have a red-hot housing market, but that red-hot housing market doesn't seem to be serving the people that are most in need of housing. We have a huge homeless crisis. We have a huge demand of lower-income families that cannot afford housing as property, and the majority of that housing economy, that the product that is being built in that red-hot housing economy, or the houses that are being sold and resold in that economy, in the existing housing stock, the majority of that is out of the reach of those people who are most in need of housing. That includes young people. We have heard many times that younger families now cannot access the housing market. I'm not necessarily a defender of housing as property. I think we should have less reliance on housing as property, and we should have a robust rental market. But it is a sign of the crisis that we are in, and that has been exacerbated through the pandemic, that we now have a problem of access for large parts of the population. And what that does in the future is, of course, that you create a two-class society. You could create people, you create one side of society which owns property that is worth a lot, and other people who cannot have access to that property, which in an environment where property of housing, real estate is linked to Social Security, because that's a mistake. People think that they can live off that property when they get older, that they have something to give to their children when they pass. Those kinds of things will not happen to those people who don't have access to that kind of housing, which means that we don't just have a crunch right now. We actually create a long-term system of inequality in the regional society that we live in.
And Professor, you mentioned that the crisis that has come from this is the main cause for unaffordable housing. Do you see this continuing through 2022, or is there some relief in sight?
I don't think there's any relief anytime soon. Part of it is, we are some people say that's a different topic. That's not part of our research. But some people, of course, have raised alarms about a potential bubble that we're in. That's a different problem altogether. But our markets are overheating, and the housing prices don't seem to be capped at any time soon. So I expect this to continue. I also have seen very few lessons being learned from the pandemic, where we have spoken about vulnerable people being vulnerable to the virus is just one example of a health concern around places that are overcrowded, people living in places that are too overcrowded, expensive. And that is not a question of whether they live in high-rise buildings or in single-family homes. Overcrowding can happen in a variety of different contexts. So we haven't seen a solution to that. So I believe that and we haven't seen political proposals that would take that up and say, here, these are the kinds of things we need to do to put an end to this financialization. We had a federal election. We will have a provincial election in Ontario next year. I haven't seen politicians come forward to say, this is what we would need to do to cool down this overheated, financialized, private property-oriented growth model. So I don't think the end of 2022 will bring us anything different. It will sort itself out over this decade, maybe, but it may take a while for this to either collapse, as we have seen it in the early 1990s, late 1980s, early 1990s, or to take a different bent. But the end of 2022 is not the time at which this will change.
Professor, thank you for that great information and also for your time this morning. If our listeners want to read more about your report, where can they find it?
Yeah, thanks for having me. You can find this on the website of the Faculty of Environmental and Urban Change at York University, and just type in euc.yorku.ca and go to the news stories on that website, and you'll find the links to our papers. And if not, just send me an email at rkeil@yorku.ca. Thank you very much.
Thank you.
When we come back, your real estate questions. This is On the Market on 105.9 The Region. Stay with us.
Need to connect with Asif Khan from RE/MAX Prime Properties? Call him 416-985-KHAN. That's 416-985-5426. Or email asif@thehomeshop.ca. Now, back to On the Market on 105.9 The Region.
Welcome back to On the Market, York Region's exclusive radio real estate show on 105.9 The Region. Time now for our listener questions. And this first one is from a threesome in Vaughan. They want to pool their resources to purchase a new build condo. What are the risks, the benefits, and perhaps the legal pitfalls of such an arrangement? Asif, what's your advice?
Well, I mean, this is a great way to get into homeownership, and it's to pool resources. We've seen that with people cohabitating in order to live in a house or purchase a house. So you've got a couple of people getting together to buy homes. But for investment properties, it is also a good idea because it helps with the affordability of the investment property. You're pretty much guaranteed to make money on it, depending on location, style, and what you're purchasing. And the only thing I would say is have an exit strategy, because with 2 or 3 partners in an investment property, you all need to be on the same page. How long are you going to hold on to this for? If you're going to sell, what's going to happen? And what if one person doesn't want to sell? What if only one person wants to sell? So these are all things that need to be addressed before you go in and sign that paperwork, because it's usually things that people don't think of. So suppose one of the parties decides that they're moving out of town and they need their money to purchase something out of town. How does that affect the purchase and the investment? Is it possible for the other 2 partners to buy that partner out and keep that property, or do you have to sell that property? There's so much to consider, so much to think about. And I would say consult with a lawyer, have your exit strategy in place before you go in to purchasing a condo.
And at the meeting with the lawyer, do they go through all of these various scenarios?
I would say, yeah, the majority of them, and maybe the lawyer could even suggest them. And, one of the lawyers said to me once in purchasing a business, he said, these are things that people don't consider when they're starting off, but they're things that always come up during the process or after the fact, and then people start scrambling, and then there's bad feelings. So as long as you have everything addressed and you have that exit strategy in place, you're not going to have those hard feelings when push comes to shove.
All right. Our next question comes from Randy in Thornhill. She wants to know if she should consider a condo investment out of province since condo prices in Toronto and the 905 are out of her reach. Asif.
We had a round the country little roundtable type of show a few weeks ago, and we had a few people on from other provinces that were telling us about pricing of condos, and you can get condos for $200,000, $300,000, $400,000 in other parts of Canada. So most definitely, it's a great way to get into the housing market. It doesn't have to be in the immediate area that you live in. As long as you have an investment that has an upside, I would recommend it. And there are some great deals when you look outside of the greater Toronto area or the greater Vancouver area. There's some great deals out there in the country.
But what about further out of the province in terms of Northern Ontario, for example? Is that a better option than completely leaving the province?
Yeah, and when you're leaving the province, there's other rules and regulations that you may have to meet in order to qualify for it. But if you're staying in Ontario and you want to go Northern Ontario or Eastern Ontario, again, there's some great properties. Durham region has some good properties that are way more affordable than the GTA or the city core. You've got Simcoe County. There's so many properties coming up. Even York region. York region has some really good deals with condos and huge upsides as well.
Now, what about in terms of if you are going to invest out of the province, try another province, how do you connect with an agent that works well with you, that knows what you're looking for, that can help you find that perfect neighborhood, especially when you're not familiar with the area?
Another great question, and what we've done is we've connected with agents across the country, and there's a group called Cross Canada Referrals that we use for our clients because these are all agents that we've vetted. We know them, they've dealt with our clients before, and we've had great success with them. So there are groups like that are out there. This one is Cross Canada Referrals, and it is a collection of the top agents from across the country that are ready and willing to help.
You are always such a resource. As a reminder, you can send your questions anytime to info@1059theregion.com. But Asif, if our listeners prefer to contact you directly, how can they do that?
You can reach me at 416-985-CON, 416-985-5426.
If you missed any part of On the Market, go to 1059theregion.com or wherever you get your favorite podcasts, including Apple Podcasts, Spotify, Google Podcasts, Amazon Music, and Audible. I'm Tina Cortez. Thank you for listening.
Need to connect with Asif Khan from RE/MAX Prime Properties? Call him 416-985-KHAN. That's 416-985-5426 or email asif@thehomeshop.ca.